Hey, good morning, everybody, and welcome to this latest Trading Places Live at earningsbeats.com. It is Tuesday. What is today? Tuesday, October 7th. Already a full week into the fourth quarter. I'm Tom Bowley, Chief Market Strategist here at earningsbeats.com. It's a pleasure to be with all of you again this morning. Market just seems to be relentless. Had a little bit of bifurcated action yesterday. I believe it was the Dow that was down a little bit yesterday. We're going to go over those numbers here in just a minute. But yeah, the Dow struggling a little bit, but the rest of the market setting some new highs again. S&P 500 just seems like every day printing a new all-time high. All of my sustainability ratios, for the most part, looking pretty solid, supporting this advance to the upside. Of course, fourth quarter is historically the best quarter for the market. You look, I don't really see a whole lot of cracks in the technical conditions of the market. I mean, if there's one thing that bothers me a little bit, it's just sentiment and just being overbought. But, those are short-term indicators, and we can see those, we can see the market remain complacent from a sentiment perspective for extended periods of time. We saw that throughout 2021, and eventually it came back to haunt us. So the longer things stay overbought, longer we stay, extended, I think the worse the outcome could be down the road. But for now, it's really hard to bet against the market when the price action is as bullish as it's been. But let's go ahead and take a look at the action. We'll go in and take a look at what happened yesterday first. So that's what I was talking about, the bifurcated action. You can see the Dow Jones finishing down 63 points, not much, 0.14%. Remember, the breakout occurred from that 45,000 level. And at that point, we got a measurement on the Dow up to 53,000. So we still got another 6,300 points to go to get to that measurement. I think we'll get there. I don't know if we'll get there by the end of this quarter, but I would say certainly by maybe the end of the first quarter, I wouldn't be surprised if we were up there. S&P 500 gaining another 24 points, 6740. My target of 7,000 I set back at the beginning of the year. Didn't look so good in April. Never changed, never wavered. Thought we were going to bounce back. We did. It was a correction / maybe for one day cyclical bear market, but basically it was a rough correction back from February to April, and we have been bouncing ever since, moving straight up. And really only about 4% away now from that 7,000 level, which is pretty amazing considering where we were and what everybody thought about the market just 6 to 8 months ago. NASDAQ up 161 points. That was your big winner yesterday, 0.71% gain. We saw money rotating back into many areas of growth, especially technology, semiconductors, that area. Advanced micro, absolutely on fire as a result of an OpenAI investment there. S&P 500 as you come down here, S&P 400 mid caps gaining just slightly, 0.12%. Small caps were down a little bit yesterday. But again, overall, market did pretty well. We saw the VIX pull back just a tad, back still in the 16s, well above the recent highs. But starting to move back down again, which I think is a good sign. S&P 500, if we look at the chart, and I'm going to shorten this to 6 months. But you can see it's been just a steady kind of push to the upside. We had the huge rally back in April off the bottom. And then once we kind of settled in, maybe in, say, mid-May, it's just been this steady, push to the upside, an occasional maybe 2% sell off to get down to the 20-day moving average. And then it's right back up to new highs. And it's hard to bet against the market as long as this continues. We do have a rough period in October that we have to, look ahead to in just a couple of weeks. It is the worst week of the year historically. We talked last month about September not being a very good month, and the market did pretty well. But we did say that it was the second half of September that tended to be worse than the first half. And in particular, it was the week from September 20th to the 26th. And if you happen to look, the only weakness we saw really during the entire month of September outside of the first day was during that 20th to the 26th week. You can see the 23rd, 24th, 25th, 3 down days in a row. But otherwise, we've been going higher. So I think it pays, it'll make sense to pay attention to the upcoming bearish period, which will start in a couple of weeks. I'll be talking about that more as we get closer. But overall, this action just continues to be higher. It's not on light volume. I mean, if you look back, we've had a lot of 3 billion getting closer to 4 billion volume days. And you go back over the last 6 months, and outside of Quad Witching Day, which is the third Friday in September and the third Friday in June, I mean, outside of those 2 days, the volume we've seen over the past, week or so has been as strong as pretty much any volume we've had, maybe with the exception of, right at the low, coming off the low back in early April. So again, I think the market has been extremely resilient. It doesn't seem to matter what is thrown at it. We've got a government shutdown right now, and yet the market is acting like nothing, nothing matters. And I think we're okay, with the government shutdown if it's just temporary, short term. I think the longer it draws on, the more of an impact it could have in the stock market. So I don't think this market is completely immune. If this shutdown starts to, if we start talking about it in terms of weeks and potentially a month, as opposed to just a couple of days, a few days, then, we'll see. We'll see what kind of impact it has in the market. But you do want to keep your guard up, because if it does drag on, it sounds like there's no end in sight, and we start to see a little bit of selling. It could be that the selling starts to pick up on itself. Maybe we'll get a 50-day test at some point down the road. We haven't seen one of those since we came off of that April low and went above the 50-day moving average. Really have not tested it since. We got close beginning of September, not quite on the S&P 500. And I think the NASDAQ even looks even better. We'll get to that in just a minute. I want to show you one other chart here of the S&P 500. I mentioned that my sustainability ratios continue to be pretty strong. What I don't want to see is us forging the new highs and all of a sudden the majority of our sustainability ratios going lower. When I talk about sustainability ratios, I'm generally looking at growth versus value in different areas of the market. So just more aggressive versus more defensive, more growth versus more value, that sort of thing. So here you can see the S&P 500 going higher. And what I want to see are these intermarket relationships or sustainability ratios going higher with price action. So coming off the bottom and moving up, there's the S&P. We move down. Here's the QQQ versus the S&P 500, right up near high. Discretionary versus staples. Yesterday set a new high. The iShares Russell 1000 growth versus iShares Russell 1000 value. This is simply large cap growth versus large cap value. And you can see the trend clearly is higher. Same thing. This is a different way of looking at it. Still large cap growth versus large cap value. Continue to be in an uptrend. Mid cap growth versus mid cap value. Again, another uptrend getting ready to break out. Small cap growth versus small cap value is where we've seen a little bit of a difference. We're seeing a little bit more money rotating into some of the small cap value, which isn't a bad thing, especially temporarily. Normally, when we get into the fourth quarter, we do tend to see value stocks do a little bit better, or maybe at least start to keep up a little bit better with growth than it does throughout most of the summer months. So I think part of that's, playing in here. I think also, small caps just a different breed than mid caps, and especially large caps. But I would continue to watch this and just see if the growth does pick back up again. Right now, it does look like, at least over the last week or so, we can see growth coming back in from a small cap perspective. And overall, I think that's, really what we've been seeing in the market. And I'll take a look at the some of the growth, an absolute chart in just a second. NASDAQ 100, of course, this is primarily growth, but you can see NASDAQ 100 looking a lot like the S&P, just simply putting in new highs, it seems like, every day. Not really much to add there. IWM breaking out again, closing at another all-time high yesterday. So we are starting to see a little bit better performance again from small caps after they had pulled back. Really didn't participate for a few days as we'd gone down, tested that 20-day moving average, but we held. Now we're back up at all-time highs again. So small caps looking much better. Transport's still trying to get something going. I know many of you have reached out to me and said that the transports versus utilities going down because a lot of the more of the power grid and all that's so important, supporting AI and all these data centers and everything else at the XLU, and the utilities are going to be a little bit, maybe more robust on a relative basis versus transports, and that's what's causing, that relationship, that ratio to continue moving lower. Normally, when the market moves up, we want to see transports outperforming utilities. And I somewhat agree with that argument. Appreciate all the comments that have come in. But that doesn't change the fact that transports aren't moving on their own. I mean, the absolute chart, you can see transports still well below the double top from back in July. The market keeps setting new all-time highs. A lot of times transports will go with the IWM, small caps setting all-time highs. So transports, for whatever reason, even on an absolute basis, if we forget about the relative basis, on an absolute basis, I really don't quite understand why the transports aren't moving. If you're bearish, this is certainly one of the things I would lean on. But it's not enough. I mean, there just aren't enough bearish signals out there to bet against the market right now. But if others start to build, if some of those sustainability ratios, those intermarket relationships I just showed you, if those start to turn back down while the market keeps trying to go higher, that would be a problem. That could add to the issues we have here. But again, it's very, very unusual. It would be very, very unusual to start any kind of a bear market in early October. When you look at a bear market, of course, you have an all-time high. When I think about a bear market, it starts with an all-time high, which is where we're at. So in theory, we could start a bear market at any moment because they start from all-time highs. But what I would say is the only one that I can think of, and I'm pretty sure the only one on the list, because there have been 15 bear markets since 1950. The only one that has started around this time was in 2007. And that was that was the big drop during a secular bear market when we fell. I think that top occurred on October 10th of 2007. So that's the only time in history, we're going back 75 years, when a bear market has started this time of the year. Like I said earlier, fourth quarter is by far the most bullish period of the year historically. So anyway, take that for what it's worth. I wanted to point it out. Moving on to the growth. So I mentioned the growth kind of regained some leadership. Yesterday, you can see growth was up about 0.6%, a little bit more. If I take a look at the IWD, which is the large cap value, that was up just 0.13%. So we got that push again from growth stocks. That's what drove most of the market yesterday. That's why we saw the NASDAQ doing as well as it was doing relative to the S&P 500. And if you look at the semiconductor group, you can see this week has been a really good week. We had a big gap up the start of the week, and then we've kind of continued just kind of going along sideways. A big part of that was AMD. I said, this week. It was actually toward the end of last week, and now just carrying through this week. But look at what happened yesterday with Advanced Micro. Advanced Micro had closed. Let me give you the numbers here. Advanced Micro had closed at 164.67 on Friday. And then yesterday we wake up to an open of 226. 226 from 164. That was a massive move. That's what, 35 and 20. That's 61 points on 164. I mean, it's almost 40%. It was probably 35, 37%, something like that at the open. Now, big selling afterwards. I think obviously we made a pretty big top. But I think AMD will make another run back to the upside. I think we have to let this short-term weakness kind of play out after that gap up, because when it gaps up, remember, market makers are on the other side of the trade. So everybody's jumping in, all excited. Anybody buying yesterday at 226.45, down probably about 10% by the close. Or market makers, if looking at it from their angle, they started shorting at the open and made 10% by the end of the day. So it's hard to go against the market makers. Banks. So still interested in these small, mid-sized banks. We started to get a run yesterday morning. A big move up in the small regional banks. They came all the way back down to where they kind of started from, and then started to make a move into the close again yesterday. If we pull up an intraday 5-day chart, you can kind of see what I'm talking about here. So we got regional banks starting to make the move at the end of last week, second half of Thursday, then on Friday, and then yesterday, Monday. Big gap up, came all the way back down, filled the gap, went all the way back up again to a new high, then went through this whole period of selling for about 3 hours yesterday, and then in the last 45 minutes, started to make a move back to the upside. I think pre-market was pretty flat. Let me give you the numbers. I'll go across all the major indices. We got the diamonds. Of course, we'll be opening in just under 15 minutes. And we got the diamonds right now. Pre-market up 0.17%. Spider, tracking the S&P 500, up 0.14%. QQQ, of course, that tracks the NASDAQ 100. That is up 0.23%. Small cap IWM, tracking the Russell 2000. That is up about 0.2%. And let's see what the banks are doing. KRE, not really doing much, up 0.11% this morning, 64.16. It will try to extend what we saw in the last 45 minutes and hopefully try to avoid what it saw in the few hours prior to that, which was the selling. But I think when we step out and we look at a longer term chart, pulling up a daily chart, the overall uptrend remains intact here. I think we did have, lows down around 62 or just above 62, testing some lows that we saw in the middle part of September. But the group now starting to rally back, which I think is a good sign. Eventually, I think this whole 67, 68 area to the upside is going to be where we're going to have probably the biggest battle for small and mid-sized banks. The banks are going to be reporting first. So if we go in here, take a look, pull up Zacks, might as well just check this out and take a look at it while we're thinking about it. See, we're going to start off with the big banks, and I believe it starts next Tuesday. Let me first, we'll take a look at what comes out later this week. So today, we got McCormick Spice Company. Tomorrow, not really anything much. Then we've got Thursday, Pepsi, Delta Airlines will be out on Thursday. Friday, not really anything of consequence. It's really next week when we start getting into the earnings. And it starts on Tuesday. JP Morgan, Johnson & Johnson, Wells Fargo, Goldman Sachs, Citigroup, BlackRock. Those are the big ones. Those are 6 stocks, mostly in the financial and healthcare area. Actually, mostly in the financial area. Johnson & Johnson, the only healthcare there. But that's going to get, earnings season kicked off. But really, the next couple of weeks, tons of banks will be reporting. So it's the big banks first, then it's the small banks, and the KRE is more small and mid-sized banks. So that's they might be impacted somewhat by the reports of the larger banks, but it's really going to be once those smaller and mid-sized banks start reporting, that's going to have a big impact on the KRE. I don't know what I think their current earnings are going to be strong, but I really think their outlooks with rate cuts coming, I think they're going to have strong outlooks. And I think that's what's really going to start driving the KRE in some of these interest rate sensitive areas of the market. Speaking of which, Homebuilders. So Homebuilders took a little bit of a hit yesterday, but the 10-year Treasury yield's been back on the rise for the last few days. So I think, we came back up. We started to bounce on the XHB, kind of about where we needed to. Went right up to the moving averages and failed. So that's not a great look here on the short-term chart. I think the weekly chart looks a little bit better. But on the daily chart, I'd want to make sure we hold about 107.50 to 108. That's kind of an area where we broke out from and then came back down and retested and then went up. So if we do go a little bit below the last low, I'd really watch 107.50 to 108. I'd like to see that area continue to hold for the home builders. So let's stretch this out. Look at that weekly chart. You can see on the weekly chart, we've got an uptrend. We haven't even tested the 20-week yet. Notice that 20-week moving average comes in at 108.26. So If we lose the 107.5 to 108 level on the daily chart, which would not be good, we would also be losing the weekly, this 20 week moving average support as well. So they kind of go hand in hand. That's what I really like it, when you can look at a chart and you can find support that is similar on two different time frames. So when you got the daily chart showing support in that same area that you've got support on the weekly, you know that if you violate it, you're violating it on two different time frames, which is generally not good. Those looking at the daily chart, which probably are more traders, are likely to react if we have a breakdown. Same goes for those maybe who are looking to swing trade a little bit longer periods, or who are just interested in the long term, maybe looking at weekly and monthly charts. They're going to look at this and see, hey, XHB is coming up on some pretty good support. This is where I would fully expect to see a turn back to the upside. And I believe by the time the fourth quarter is ended, we're going to make a run for this 125 area. At least that's my story for now. 10-year Treasury yield, mentioned it. Here we got just a little bounce here over the last few days. Today it is down just a tad, down about 1 basis point, 4.15% on the yield. I think as long as we remain under 420, I think we're still in this downtrend mode. Let me annotate this, show you what I'm talking about. Here's that 420 level. So here's your support. Right there. Right there. Maybe again right over here. And then you can see, well, one more right there. And then came back up right there, 420, and failed. Now we got the 50-day moving average and yield resistance both at 4.20%. So I think if the 10-year Treasury yield remains below the 50 and starts to roll back over again toward 4%, which is what I'm expecting at this point, then I would expect that we're going to see this daily PPO remain in a negative territory, where it has been mostly for the last 3 or 4 months as we have been trending lower. Maybe one other way to look at this would be drawing some trend lines in here. Maybe something like that, where we might be able to just drag this line down, maybe connect that, give you some idea maybe where we're heading. Ultimately, we got some support down here around the 390 area. And you can see if you move back down within this channel, we could get down to 390 and still be in this down channel on TNX. So that's kind of where I'm looking at there. A couple other things here. We got the dollar. A lot of folks talking about the dollar. It's been kind of hovering down here. I think this is a pretty key area of support, down around the 96, 97, 98 area, trying to bounce back up above that. I know many of you like crypto. I don't usually look at the cryptos, but we'll take a look at Bitcoin, which is now up to 125,000. And if we go back out here to the 5-year weekly chart, you can see that is remaining in this uptrend, and it is at all-time highs. If we take a look at some of the others, let's take a look at Ethereum. Ethereum also trying to challenge the high from back in 2021, trying to break to an all-time high, get through that 5,000 level. Then we've got maybe Solana. Solana moving up here, not too far from all-time highs, getting closer. What else? How about XRP? And you can see XRP, which went to an all-time high earlier over the summer, still got a little bit of room to go to get back up to those highs, but looking pretty good in an uptrend as well. So you can see the crypto is doing really well. That's another, I think it's another good sign for stocks, to be honest. I mean, the one thing that I like about comparing cryptos and U.S. stocks is I believe that they're both, they're both driven by risk-on environments. So I consider cryptos to be a risk-on investment, meaning those willing to take big risks buy cryptos. When cryptos are at highs, that means that folks are willing to take on a lot of risk. And that's the environment where stocks thrive. as well. So anyway, just wanted to point that out. Looked like cryptos were doing really well, which I think also aids US stocks as well. All right, for those of you who are new to Earnings Beats, new to the show, you can go over to earningsbeats.com, sign up for a 30-day free trial. You can click on that right there. Name, email address will get you on our free EB Digest newsletter. This is no credit card required, completely free. It comes out Monday, Wednesday morning. I'm going to give you a little hint on one of the stocks that I am going to show you. Let me, I just sent out to our paying members at Earnings Beats 10 stocks that I think are poised to potentially make a pre-earnings run. The thing is, most of the biggest moves in the stock market are anticipating great earnings. And so these are companies that had previously been leading the market. They've pulled back. They've been consolidating more. Most of them have RSI readings that are between 40 and 50, which is where you want to get in usually on an uptrending stock. And they're all going to be reporting earnings anywhere from the next 2 to 5 weeks. So these are all stocks that could be getting set to make big moves up as they get closer and closer to their earnings report. So sent all of that out today to members at Earnings Beats. It should have gone out probably a little over an hour ago. That is in lieu of a daily market report today. I just want to make sure you know, did spend quite a bit of time coming up with the 10 stocks, annotating the 10 stocks and providing those. And quite honestly, the market's been kind of boring of late anyway. If anything major changes, of course, we'll reach out to our members today. But otherwise, view this list of 10 stocks as in lieu of the daily market report today. All right, I'm going to give everybody one of the 10 stocks. So hold on here. Trying to think. Well, let me go first into all of the 10 stocks come from our raised guidance chart list. And the reason I started here is that I wanted companies where more recently management was very confident. I mean, you don't raise guidance in your last quarter or in intra-quarter unless you're really confident about your prospects. And so, not that it doesn't happen, but it would be a little bit more unusual for a company to raise guidance 3 months ago and then miss their earnings. If you're raising guidance, if you beat your earnings last quarter, you raise your guidance, tendency is you got a lot of momentum going in your business, and you might just have another big run up heading into earnings. So I'm just going to take a look here because some of these I'm just going to try and get reminded as to one. All right, I'll bring up Willdan Group. This is one of the 10 that I'm going to be watching, and I'll tell you why. First of all, this stock had a massive move. I mean, we're talking about a stock that went from 32 to 120 in about 5 or 6 months. So clearly a lot of great stuff going on. Look at all the volume pouring in. I mean, Wall Street could not get enough of this stock. Now, I believe off of an uptrend like that, what you might end up seeing is some sort of cup form. And we might still be in the stages of coming down to form the cup. And then maybe we get an earnings move to start putting in the right side of that cup, perhaps. Anyway, what I'm looking at here is I'm going to annotate and put in the bottom of gap support, which comes in at about $88. So I'm going to close this and use the crosshairs here to get the exact number. So we opened, we closed that day 89.11. So 89.11, and we finished yesterday at 90.86. We are only $1.75 away from testing a major gap support level when recent highs are all the way up at 120. So from 90 to 120 would be a 33% move potentially. While on the downside, if you're holding, using gap support as your line in the sand, and I would be doing that on a closing basis, So maybe intraday, maybe we go down below, $89. Maybe by the end of the day, we come back up. Maybe it could be a hammer, something like that. But I think as we get closer and closer to this level, this is an area where maybe these are not guarantees, by the way. These are just stocks that have been hot. You can see it's been pulling back for a little while. If I go over to this chart, you'll see the RSI, which is down right now at 37. Normally, when you pull back and you go down to about that 40, we went just into the 30s here, went down into the 30s here, and now just barely into the 30s here. But when you get down there, a lot of times that's when an uptrend starts back up again. So that's what I'm looking at here. Again, it's no guarantee, but I love the reward to risk. Anyway, this is one of 10. If you want to get the other 10 or the other 9, all you got to do is become a member at earningsbeats.com. So again, what you do is go over to earningsbeats, click on this start your no-cost trial. It will give you a little explanation of what you're going to get, and then just fill out the form. 30 days for free. And we will let you know at the end of the 30 days when you're about to expire that you're going to get charged. We're not going to sit back and just wait and just let it happen. We're going to let you know. And not only are we going to let you know, we're going to give you a special where you can save a lot of money on an annual membership. So anyhow, check that out. Go over to earningsbeats.com. Make sure you sign up for a 30-day trial and get your membership started today. I think the next 30 days are going to be awesome and critical in terms of guidance, in terms of some of the research that we're doing. Got a couple of big events coming up. We've got earnings webinar coming up. We'll have our ETF draft coming up later this month. All of that for members. You get those special perks, of course, updated chart lists as we get into earnings season. But you get all that for free for 30 days. So make sure you check that out. All right, let's see what the market is doing now that we've gotten open. Then we'll wrap this thing up. Dow up 114. We are seeing the market up nicely across the board. VIX down just slightly. There is AMD now gapping back up a little bit more today, up 14. Trade desk really starting to make a move here. It's been gaining a lot of momentum of late, tacking on another 5% today. So that's been a good one. SMCI trying to make a big move here after a recent weakness. Let's see. Let's take a look at that KRE, see if it's doing anything. Not really, up just a tad this morning. QQQ, semis. Yeah, up a little bit on the semis. Need to try and break out above about that 27, get a confirmed kind of breakout above 27.8 there. That would be good for the semis and, of course, for the NASDAQ 100. But that is it for me. Again, sign up for that 30-day trial at earningsbeats.com. I think you'll enjoy it. Also, if you are just a loyal supporter of us here at YouTube, we appreciate that. We appreciate you being part of the community. Make sure you like the video and subscribe to our channel so you don't miss any of our free live streams that we do from time to time. Have a great day, everybody. Happy trading.